cryptocurrency is so interesting. So we're so lucky to have people who are like on the front lines of covering this really big story. Did you already ask how many are invested in crypto?
No, I said who's heard of it.
Oh, who's heard of it? Yeah, how many of you have heard of it? I'm sure everyone. How many of you are invested or have invested in crypto?
How many people?
1, 2, 2.
Can you still access your account at this moment? Okay, cool.
Okay.
You're in good shape.
So we're really lucky to have a panel here from the Wall Street Journal. Jenna Telesca is actually the editor for crypto, and then 2 reporters, Vicki and Paul. So we're really lucky to have them. So can I just start off by asking one question? I mean, I'd love, first of all, for all of you to kind of talk about what you do, how you got there, how you got to the Wall Street Journal.
We've got slides on that.
We have slides. But, and then after that, my opening question is very simple. And I already mentioned this, but typically when Wall Street, or anyone for that matter, comes up, the finance industry, any industry, comes up with a new product or a new security, it's usually because it's trying to solve some kind of problem or trying to fill some kind of void. So one of the things I really want to know is, what is crypto trying to improve upon, right? Why was it created to begin with? So.
Great. I'm told these are working, so we're gonna believe in the process. These are these guys. They're great. They're the experts. I'm just gonna talk because I'm the editor, and that's what editors do. They just take credit for reporters' work. Vicki focuses on the market side in crypto. She knows everything, so ask her questions. Paul knows all the DC stuff and the regulation, and we can talk about the word security later. Well, that's me. So.
What Vicki does.
So these photos, these illustrations I stole, again, editor. Emil Lendoff is this fabulous photo editor that he's still at the Journal, he moved into a different job, but he shows how you can take something boring like finance or seemingly boring like finance and just make it super fun. Anyway, most of these are from him.
You put a dog face on the moon.
Yes. So. Oh yeah, that's Doge. He's going to the moon. Vicki, do you want to start off talking about what you do and, what crypto is? Oh no, wait. Let's see if we're going to get to what crypto is later. Yeah, you don't have to just what you do.
Hi everyone. Thank you for participating in this panel. I am a markets reporter covering crypto and retail investing for the Wall Street Journal, and it's actually pretty different what I do on a daily basis, depending on if it's a normal period in crypto or if it's a period where there is like a huge bankruptcy or collapse of a crypto company, which has happened a lot, unfortunately, in 2022. Normally, when there's just like a regular flow of news, I would just start on my day by listening to some crypto podcasts and markets podcasts in the morning, and then I'll go through the research and newsletters in my inbox, and then I have calls scheduled during the day. So if there's breaking news, I would cover the breaking news, but mostly it's about trying to build relationships with sources, so experts, executives in the industry, and then also trying to stay on top of breaking news in crypto. But when things like, for example, the collapse of crypto exchange FTX happened, you're kind of on 24/7 because crypto is global and many crypto companies are based overseas, in Asia, in Europe, all over the place. So you're hearing from people working in the industry kind of 24/7, and you're using these different chatting messengers and chat apps, so you're getting information coming to you 24/7. So whenever you wake up, you see something that's urgent and needs to be chased and reported out, you just start your day whenever, and then your day ends basically kind of when news stops. So it becomes really exciting, a little bit exhausting, but there's a lot of adrenaline rush when big things like that happen. So it's a very exciting beat to cover. Truly no day is the same.
Paul.
I'm Paul Kiernan. I cover financial regulation in the DC Bureau. I've been in DC since 2018. Before that, I was in Latin America for a total of 11 years, in Mexico and then Brazil. So in an organization like the Journal, a big one, you can bounce around. There's different ways you can kind of set up your career in journalism. You can be a specialist and write about economics for like 30 years, or sports. What I've kind of done with my career so far is just change jobs every few years and write about totally different things, or go to a different city or country, and the Journal allows you to do that, so that's great. And then in terms of what I do, I read about the Securities and Exchange Commission, which regulates a big chunk of the financial markets. And crypto is a part of that because the SEC thinks that it should be regulating, most of crypto. Crypto is like, as an asset class, is totally unregulated. But Washington is very slowly trying to change that, and so I've just kind of claimed that turf.
Well done. This is what I do all day for the most part. Like whether it's stories or reporters or my fellow editors.
I don't get it.
How many of you don't get it? I get it. I think it's really funny. I was an editor at the Wall Street Journal too, so I totally get it.
So with the crypto beat, it's been really fun. I've been doing that for about a year. I've been at the Journal for 3 years. I kind of snuck in the side door because I worked in trade journalism, first writing about supermarkets and then restaurants, and you could do really great stuff in the trade beat. You don't need to start where you want to be. You could write good stories everywhere. But I work on crypto stories right now for the past year, which has been an interesting year. And the lovely thing about it and the difficult thing about it is like, it's not just like one person's beat. Like there's 2 people here, but like there's like 22 people that can do crypto stories, right? Like it's about, we have editors in Asia that we work with, San Francisco, DC, where else? Oh, London and Germany are the 2 that are most prolific writers, and it's like a human story, it's a finance story, it's a bankruptcy story. Like I'm not an expert in bankruptcy, but I've learned a lot in the past year. So it's just like coordinating between those people and making sure that like we're using the knowledge, which is this is like something, the best problem to have, where you have so many people that know things and like bringing their ideas together for stories and making sure you're not wasting time like contacting the same people. So like there's that kind of thing, and then there's also just like figuring out what stories we should do, planning, and talking to the reporters who tend to be the experts in things about what they think, because usually that's a good way to go. So let's just start with like what crypto is and isn't. Thanks. I don't know if the visual guy, the guy's still here, but he saved my GIFs. This is from Emil too. Which one do you want to start?
Does anyone want to take a stab at that? Like what is crypto? Does anyone?
The red sweater does.
Yeah. I saw you shaking your head.
Yes.
I know someone knows.
I mean, no, like a lot of people don't know anything. Like the thing about crypto is that people think they know what it is, and then we've been finding out it's not actually that. So it's okay to be wrong. I saw you raising your hand.
Maybe just a digital asset that has an inherent value to it.
That's a good one. Thank you. Yeah, it is certainly digital, and what regulators often say is that a lot of assets are digital. Stocks are digital, dollars are digital. Like not nobody, of course, but a lot of us are paying for. You guys probably all have like a student like ID card that you have money on and go to the dining hall and like you get your chicken tenders or whatever. And that's digital. That's a digital asset, and your dollars in your bank account are digital. And the stock that you own, you probably don't own, but maybe your parents own, is in digital form. So crypto is, I don't know that there's like a single definition of it, but it was originally conceived as a means, as a new form of digital money that could be peer-to-peer, not go through a bank. And it was created in, Bitcoin was created in 2008 and 2009 when everybody was angry at the banks. Nobody liked banks in 2008 and 2009, so let's get them out of the economy.
So that was the problem it was solving?
That was the problem that it was seeking to solve.
Seeking is the operative word.
Yeah. Do you want to pick up from here?
Here, I'll give you a little. How is it different if you own crypto? Like, let's say you have some people that own crypto. Where do you keep it? Coinbase. Okay, cool. So if you have, a Bitcoin in Coinbase versus owning, a stock in Fidelity, like how is that different?
The thing is that Coinbase, as a cryptocurrency exchange, it's not like something like the New York Stock Exchange where you just list your stocks and securities there. Coinbase is sort of like an all-in-one stop where they list the cryptocurrencies, the tokens, the digital assets, but they also store your digital assets. I'm sure you've heard that cryptocurrencies are very difficult to store or very complex to store. You have this private key, which is basically a password to your crypto wallet that you need to remember. It's a long string of numbers and letters. And then you have this thing called a public key, which is like a address that you can see in public to track the money flows from one crypto wallet to another. So it's like a very complex process. And then because crypto exchanges store every single user's password, they're often very vulnerable to hacks as well. Many hackers would attack these crypto exchanges because they will be able to get access to billions of dollars if they succeed. And the problem with being an exchange in the sense that if they file for bankruptcy, as a customer, you're kind of considered as an unsecured creditor, meaning that you're last in line to get your money back. Senior bondholders or shareholders in Coinbase may be able to get back their money earlier than you. So if something happens to Coinbase, that it could take you 10 years to get your money back.
So
unfortunately.
once you put it in a third party, it's not you're lending it to them. It's not yours anymore. So that's different from a stock. And there's laws and stuff to prevent that and things that Paul knows better than me. But once it's in there, it's not yours, right? So that was an important thing to keep in mind as we were covering this, because a lot of these companies went down and they froze accounts and no one could take their money out and it was just gone. All right, now they're waiting in line, but they're going to grow old waiting for it.
Yeah, I mean, the just to kind of close the loop on this, I mean, the difference between a cryptocurrency, Bitcoin, Ether, Litecoin, any of these thousands of assets, the difference between those and a stock or a bond or a U.S. dollar is that there's no regulation at the federal level that, in the case of other assets, like with stocks, Vicki was talking about, brokerages and exchanges, there's different kinds of intermediaries that have their own conflicts of interest that the regulations step in, and you have to separate that part of your business from that part of your business to reduce conflicts of interest. And in crypto, particularly with the exchanges, you see everything done within one company, and so there's just kind of more opportunity for conflicts. that often result in, higher costs, unseen costs for the user, and this risk that we saw in FTX that, like, if the platform goes down, people all of a sudden can't get their money out. And, that's not the way it's designed to happen. In a bank, you've got deposit insurance. In a brokerage, you've got a similar thing. In crypto, there's just no protection. There's just, like, no protection from the government there.
And these third parties are what helped crypto grow, right? They were solving the problem of, like, you don't have to be a programmer anymore, right, to own crypto. You could go to Coinbase. You could go to all these other places. You could have gone to those places that no longer exist and have your money lost. But it solved the problem. And during, the pandemic and the boom years when the stock market was going up and people were very comfortable, like, being risky, like, everything was going awesome, right? Like, everything was going up. So it was solving a problem. It let crypto grow really big, but it grew big without any, like, good foundation, without any laws, any protections. And we're seeing kind of the result of that now. So this is Paul's slide. I'm going to let him talk about it. I transcribed it.
Yeah, so, like, we were talking, the earlier panel was just about kind of, why would you want to do business journalism? When I started, I did not have any interest in doing business journalism. My first job was at Dow Jones Newswires, which still kind of exists. It's like a Bloomberg. But I didn't even know what they did. I had no interest in writing about, like, the stock market. But the thing about business journalism, like sports journalism, is that people are willing to pay for it. And people were willing to pay for it. I think people are kind of getting more willing to pay for journalism in general now. Maybe some of your teachers have a better read on that than I do. But, like, in 2007, when I was getting out of college, everyone wanted everything to be free. And the only thing anyone would pay for was business and sports. So it was I think so. Yeah, I think so. So it is a good way to like break in, and it's a good way to just kind of like develop the tools that you need to be a good journalist. And so, like, you learn to ask about incentives. Like, every person you talk to when you're out reporting has a motive. Like, there's a reason they're talking to you, and it might just be because they need a shrink and they just need someone to, like, listen to them vent and hear their story. But it might be because they, like, their company has an angle or a narrative that it's trying to push through the press where policymakers will see it. And so you just always want to be, like, try to be, be aware of that, people have incentives, and, try to, like, gauge those when you're talking to sources. There's a quote from Upton Sinclair that I think about a lot.
The Jungle?
No, not that one, no.
Oh.
So Upton Sinclair is a journalist, now dead, from Baltimore, a muckraker, and he said, it's difficult to get a man to understand something when his salary depends on his not understanding it. And so whether it's in crypto or, in DC when I'm talking to lobbyists for, like, the hedge fund industry or something, you will talk to people who seem to have a very high conviction that, like, what they are doing is, right and good. And you hear it all the time in crypto, like, we're democratizing finance, we're taking out the banks, you even hear, also kind of related to the previous panel, claims that, like, crypto is some path for racial equity because, it could give populations that are underbanked, access to financial services. And the thing to remember is that everyone who's telling you that, who's spinning those yarns, has a lot of money to make. They work for companies that have a lot of money to make if more people invest in this asset class. Yeah.
Cool.
Am I supposed to keep going here or no?
Yeah, why not? Why don't you talk about?
Well, yeah,
So this
okay,
is
yeah.
I pulled up. I had this big, long presentation, but I decided to make it like a little shorter and less detailed because Paul gave me some feedback. But we have some examples here just of like, so when you're asking like, what are the conflicts of interest and who has incentive, like it's important to ask that on any beat you have. It's not just business journalism, but like, when things were going great with crypto, like no one was asking these questions because things were going great. Like they were awesome.
Everyone's making money. It's great.
Yeah. And like our job is to just like be party poopers. And this is one of Paul's stories about Washington hires. Is this a revolving door story, I think?
Yeah, I think this was the one that was like a year ago.
And so that was before all this went down.
Yeah, this is when crypto is still kind of ascending. Prices of Bitcoin and stuff are high, and everyone's making money hand over fist. And we just started noticing that like everyone who had worked in a financial regulatory agency in the government in the last 10 years was getting jobs in crypto.
And they went after journalists too. Like that was like, they were like picking off journalists and offering them lots of money that covered crypto to like go over to there.
Mm-hmm.
But these guys, like journalists, we don't have so much power, but these guys do have power.
And they make a lot more money.
Yeah. And then donors. This is your section.
This is my section, all right, so I just need to not put the mic down. So everyone here familiar with FTX and sort of at a high level of that saga? Anyone not familiar? Okay. So FTX was a big crypto exchange that went down.
What's a crypto exchange?
A crypto exchange is a company, it's like a platform where you can sign up and deposit some money and then start buying and selling crypto, buy Bitcoin and Ether, and you watch it go up and you watch it go down. So about a year ago, during the Super Bowl of 2022, there were like 1 million ads for this company called FTX. It was a very new company. I think it was started in 2019. Tom Brady, was it Tom Brady? No, it was who was it? Brad Pitt?
Larry David.
Yeah, Larry David and Brad Pitt and Tom Brady were all, doing these Super Bowl ads saying, I'm investing in crypto and FTX or UN. And what they're trying to do is get ordinary people to sign up and give FTX their money. At the same time, campaign finance disclosures started showing that FTX became like one of the biggest political donors in the ahead of the 2022 midterms. And so, yeah.
And why does that matter? That they're, like, what were they trying to achieve?
Yeah, they were trying to, everything indicates that they were trying to make the laws in the United States more favorable to their industry. Going back to what we said earlier, crypto is totally unregulated. It's an asset class that was created without much thought into, how do you fit this into existing laws? In the United States, like in most countries, if you are, an entrepreneur and you're selling somebody, if I'm selling you a financial instrument, promising you, a return in the future, it's not like I'm selling you a house or a phone that you can hold in your hand. It's just a promise. So there's a lot of laws that have developed over a century practically to make that promise a little bit more binding and put a little bit more meaning behind it, and that framework just hasn't been applied to crypto yet. And so a big part of what FTX was doing and what the broader industry was doing with these revolving door hires was getting people who could help them change the laws to make it easier for crypto to come in and comply.
You know what? We're going to come back to this because I need to give you a break. And we'll come back to this too. Both of these two are really great at this constant source building, because you can't wait till the news breaks to find people that know about that stuff, right? And you can't break the news if you're not talking to them all the time. But we'll come back. So this is another thing to keep in mind, is that when things seem too good to be true and crypto's like $3 trillion of value, like it's usually too good to be true. Again, we just like ruin things, journalists. So this is a story by reporter Alex Ozapovich, and we got it done in April, and he'd actually had his eye on it for a while. You should never put off things that you were, like, if you see something that's a problem, you should do it first, because you don't want to, you'll kick yourself later. But anyway, there's this thing, I promise not to talk about algorithmic stablecoins, I'm not going to, but there is this thing called Terra USD, and they were cutting edge crypto coins, right? And they said, like, don't worry, like, this is like brilliant. It was like $40 billion worth of like investments, people's money in it. And, you know, the people that were observing, market observers and academics and smart people like that were like worried about it, because he had this like, you could read the white paper on like how it works, but like if you read it, it doesn't 100% make sense.
If things are really hard to understand or explain, you know, you should be skeptical. If you have to do all kinds of mental gymnastics to understand something, and the person who's explaining it to you is using words and like, you know, acting like they are just, you're not understanding it because you're not smart enough. I mean, that's like a big red flag. So
Yeah. And like that's how I see my job. Like our job is to be the translators and to be like, to know when you're not, don't let somebody talk down to you and use like all this jargon and be like, and don't avoid topics like financial journalism because you're like, oh, I don't know what bonds are, I need to go to school for that. Like, no, like just go in there, be comfortable being uncomfortable, and ask people dumb questions, because the dumb questions are where you get the good stories.
yeah, always ask the dumb questions. Like the dumber the question, you know, just
The better.
charge ahead.
So Alex did this story. Actually, we meant to do it earlier, but he did it in April. And then in May, the whole thing crashed, right? And that was the start of all of this. So like people started taking their money out of the bank, their crypto out of the bank. It was like a whole thing, right? And I would argue that the entire crypto collapse started here. This was the first domino. Well, I mean, the first domino was the Fed, but we're not going to get into that. So by doing that story about people being worried, even though it wasn't a big deal and things were going great, we were able to kind of hopefully help people. We did have, you know, regulators and whatnot like read our stuff. And anyway, so yeah.
Was there like a precipitating event that caused all of this collapse of crypto?
Yeah, it was Carolina. It was this thing. It was this complex of cryptocurrencies that.
Well, and that, like, so, if it wasn't Terra Luna, it would have been something else.
Sure.
You want to talk about the Fed?
Me?
No, I'm gonna let Vicky.
So I guess a lot of the, a big reason why cryptocurrencies and stocks and all types of securities did really well, starting in mid to late 2020 till the end of 2021, everything was going up. You had the GameStop, meme stock mania, and then SPACs, this type of special purpose acquisition vehicles, like a financial instrument that doesn't even run any businesses, were going up. And then crypto went up even more than anything else. A lot of the reason that is because the Fed's interest rates, which affect everything, were basically ultra low and close to zero. And because of that, the cost of doing business is really low for a lot of these companies. And then at the same time, you had the pandemic checks hitting the accounts of a lot of retail investors, retail traders. So there's a lot of money in the system sloshing around, and essentially. And then also during the pandemic, people weren't going out and spending as much money as we normally would on commuting, on traveling, and other expenses. So there's just a lot of money. Essentially, people kind of didn't know what to do with it, and they put it in their security brokerage accounts. They put it in their crypto exchange accounts, and that's sort of altogether part of the reason why that causes huge rise in asset prices. But then starting in late 2021, the Federal Reserve said they're going to raise interest rates because we had this huge high inflation. I think it was like a 40-year high inflation that we've seen in the U.S. So the Fed needed to raise rates in order to tame inflation. And as a result, we started to immediately see a lot of these asset prices started plunging, starting with meme stocks, and then before you know it, it was crypto.
So like once that stuff started having any pressure, that's where you see like the cracks in the system start to develop. So like when that, we knew that there's gonna crypto grew so big so fast, there's so much money, and we knew these companies didn't all have the best practices in place. So like we're just scanning constantly to see like where's it breaking, right? Like we couldn't have necessarily guessed it was gonna break at Terra Luna. Like we knew that might go down, but we didn't realize it would be such a big an event. So, you know, you can't always predict where, I mean, it would be lovely if you could be like, this is what's going to cause all of these problems. But you can start pointing out like where the foundation is shaky, and there's like things that don't make sense that have billions and billions of dollars in them. You wanted to say something?
Oh, I was just going to go back to kind of like the idea of like what is crypto. I mean, you know, what is holding up the price of Bitcoin right now? It's basically like a large number of people who think that Bitcoin is worth something. It should be worth that price. Think that they'll be able to sell it at a higher price in the future. That's a little bit different from like what is holding up the price of Apple stock, or you know, we'll just say Apple stock. I mean, in the case of Apple stock, there's a company behind it. The company's making money, and the shares in Apple give you, the investor, a claim on the money that Apple is making, you know, and it's, you know, Apple has Apple stores, and it's got, you know, manufacturing operations and partnerships and branding and everything. And so there is like a concrete thing behind it that is generating cash that, you know, is kind of like why people pay for Apple stock. In the case of crypto, you know, it's this kind of hope that one day this is going to be widely used for payments or for savings or for some other application. And so, you know, that in the case of like, you know, this Terra Luna thing that precipitated the entire crash last year, ultimately what was holding up the price of these assets was like one company that proved to be pretty scuzzy, you know.
It was belief in that company, like to get back to what you just said about Bitcoin. Yeah. And like people got scared because there was like some folks taking money out of, like there were some people that were selling their Terra Luna. And then once those people got scared, everybody else got scared and pulled their money out, and that's what caused it to collapse. So like when the only thing holding something up is, I mean, the U.S. dollar, I guess, is just the belief in the U.S. government. But
there's no military behind it.
Yeah, there's no military behind Terra Luna, or there wasn't. So then another like too good to be true is like there was lots of products out there that were giving people like promising like 20% return. Actually, Terra Luna was one of those. And that like for folks, I don't know if I would have known this before, so I'm going to say it, even though you guys are probably smarter than me. You know, 20% return, like promising, like you put in your crypto and you'll get 20% more back when you take it out. Like that's huge. That's crazy, right? Like things don't work like that in the financial system, typically. So when you see things like that, like you, as a journalist, you have to be like, well, how do they make that happen? And like with Celsius, which is a crypto, kind of like a crypto bank, it was a lender. You put your money in, you lend it to them, and then they would give you a return. And they would take that crypto, and they would then find a way to make money off of it. So they would do even riskier bets. They would lend it out. What else do they do with it, Vicki?
They give it to crypto hedge funds. Also, went bankrupt. They also put in these decentralized finance applications, which are basically just like financial applications like banking, trading, but instead of being run by human beings, they're sort of automated by software, which is safe to say very risky.
So, you know, we actually have a quote in here, like, looking back, it seemed too good to be true. So one thing that's really important to us, I'll go back to Mr. Bankman-Fried, is just like remembering the humans involved. Like, it's like, why would you want to write about finance? Like, finance is just about humans. It's just like it lets itself get hidden, and it impacts every single person. So like, the more you could connect to like what's happening and these like this jargon and stuff to like people in the real world, the better, in my opinion. So this like we try to have like pictures of the people that actually lost money or impacted. Like, I think this guy was like, he had all of his money for a down payment in one of these, in Terra. This is your story, right, Vicki?
Yeah.
So like, she talked to the investors that had put their money into Celsius. It seemed like, they were a big name. They were at crypto panels. It wasn't like a sketchy company that no one, well, it didn't seem like a sketchy company at the time.
This model of a crypto lending company, which always call themselves crypto banks, is they have a very aggressive marketing agenda, which is, for example, this guy, the CEO of Celsius, Alex Mashinsky, he's go-to motto or slogan is "banks are not your friends," and he could say things like that because it is true that for a lot of traditional savings accounts, we only get like 0.2% or something like that of interest, whereas at crypto lenders like Celsius and many other places, they promise something like 18% or 20% annual percentage rate, which is very enticing, especially to everyday investors, because you put your money or paycheck in your savings account, you just don't see it grow at all, whereas in this case, you could literally see it double or something like that during the boom times of crypto. So just by this kind of marketing, he was able to attract so many retail investors.
What is a retail investor?
Just everyday mom and pop investors, you and me, not like a high net worth investor who earns like $200,000 or have $1 million in their bank account. And these people are the ones who they cannot afford to lose this money because they actually put money like down payment or like their kids' college fund or something like that in these types of accounts. So when Celsius went bankrupt, the reality is that a lot of these investors basically lost their life savings or they're financially ruined as a result.
Mm-hmm. So we'll make one more point and then we'll ask you questions, or maybe you'll ask us questions.
You guys have any questions?
Well, yeah, actually, you know what? Go ahead.
About anything. It doesn't have to be about crypto.
Oh, yeah.
Okay, so my question is, I want to ask you guys, so when I was thinking about the FTX thing, the one thing it reminded me of is like when there were depressions and banks failed and they obviously weren't FDIC insured at the time and people just lost their money. So obviously this is a similar situation because there's just no regulation to these companies and people are choosing to take that risk and obviously like you saw they're making the wrong choice. So my question is, are you guys getting any sense that the government is interested in regulating this?
This is a really good question. I'm sorry, keep going.
Are they interested? Are they heading in that direction with their legislation?
And can you repeat the question for recording?
No, what?
Just summarize this question.
Okay. So what's your name? Anab. So Anab is asking if there's any prospect for government regulation of crypto. And the jury is out. I mean, part of, anyone heard the term moral hazard? So it's basically the idea that, you don't want to reward bad behavior. The government sees crypto as a market that has, and an industry that has chosen to thumb its nose at our laws and regulations for kind of financial markets. Again, this idea that like, if I make a promise to you that I will deliver you a 10% return if you give me your money. Generally, you have to like register with the Securities and Exchange Commission before you can take before I can take your money. and no one in crypto has really done that. And so there are kind of competing strains of thought in DC right now with some people saying, it's okay, let's grandfather them in, let's write some rules that they can comply with, and not just, shut them down or sue them until they don't have any money left. And there's another strain of thought that says, no, like, you didn't think to comply with our rules and regulations. That is not our problem. That is your problem. Like,
Can I just say, so
Yeah.
Gary Gensler,
Yeah.
who's the
Yeah.
chairman of the Securities and Exchange Commission, he's one of the ones that says, we already have laws.
Yep.
We don't need new laws, right?
Yeah. And I mean, from the SEC's view, and the SEC is probably less flexible on this topic than, Congress or the White House, where people are generally like not as close to this world of, governing promises that people make to each other in exchange for money. But yeah, Gensler is very insistent that, we already have regulations. We don't really need a lot of brand new laws and regulations to govern contracts between people who want to raise investor money in the public. So
Jail, right?
yeah.
Which is why FTX got.
Is he in jail yet? He's out on bail. He's out on $100 million bond, I think.
He is not in
He's in
jail.
big trouble.
Even his parents'
He's in
basement.
big trouble.
Yeah.
But it's a battle royale right now. I mean, the crypto industry with all the money that it has left from the market crash is spending a lot on lobbyists and political donations to try to convince mostly Congress, because Congress is easier to influence than the regulatory agencies, trying to convince Congress that, we really just need new laws. And a lot of it comes down to, like, is this new? Like, is crypto new? Is there something really new about it? And Gary Gensler would say, no, like, we have new technology all the time. The internet came along 20 years ago, and we figured out how to work that, work our regulations around that. The crypto industry says, they have something totally new, and they need totally new laws for it. But right now, I don't see a lot of movement towards, some grand bargain between the government and the crypto industry that will allow them to continue operating without, paying a huge penalty.
They're also, the cops are out too now. Like, we're seeing, like, the SEC, like, go after some companies and actually, like, say you broke the law, you need to pay us a big fine or whatever. So the beginning of that has started. I mean, I think it's probably safe to say there's going to be more of that.
Yeah, and I mean, the other thing is, like, for that kind of, the deal that I was talking about, government working together with industry to create a grand bargain, I mean, there needs to be kind of goodwill on both sides. And FTX destroyed that. I mean, Sam Bankman-Fried spent more time in D.C. I don't think he spent more time in D.C. than in the Bahamas, but he spent probably, he spent a lot of he was spending a lot of time in D.C. And he came off as, like, a pretty earnest dude. I mean, I interviewed him. Like, did you ever talk to him?
I mean, did you ever talk to him?
He's actually famous for being very friendly and easy to talk to, especially when it comes to talking to reporters.
Yeah, and he sounded humble, about certain things. He wasn't one of these guys who was like, crypto's going to change the world. We're like, we can't have any regulation. He was like very measured, and so, I think that he built a lot of trust with the public sector, and I think everyone who trusted, not everyone, but many people who trusted him in Congress and in the regulatory agencies don't want to trust anyone else in crypto, like, ever again. And so
He was just made bad decisions, or was he a crook?
He's a crook. I'm sorry. Let's just stop with let's stop with this. I think we're all trying to give him the benefit of the doubt, and he stole billions of dollars. So
I think there's a personality. I mean, can I say that I think that there's maybe a personality, just a megalomaniacal kind of personality disorder that
you just said it. So
I mean, I think that there are, certain people, certain crooks can be very convincing, and seem like very honest and earnest, and we have a word for them.
I know the students have some more questions, but I'm just going to ask one quick question, and then I know the students have more questions. Is there some people who say Bitcoin's real, Dogecoin is not real, Ethereum is real, and some Shiba and some of the others are not real? Do you look at it that way? I mean,
So what's your definition of real here? Is it like?
Yeah, I know, that's a good question. What is my definition?
And if we start talking about what is a security, I feel like we might be here all night with this one. But you want to do it?
No. I'm not gonna go.
Do it.
I'm not gonna do the Howie. I already kind of went into it without saying.
Oh yeah, the Howie
The
test.
idea of the promise,
Vicky, would you like to try?
I mean, just in crypto, there's two factions, I guess. One faction is they call themselves Bitcoiners, but then people who don't like them call them Bitcoin maxis, like Bitcoin maximalists. These are like a group of crypto investors who only believe in Bitcoin. They think it's the first cryptocurrency, it's the largest cryptocurrency by market cap, and it's the one that has since its birth, grown in value the most, and it's the largest cryptocurrency. Therefore, it's the only one that has any inherent value at all. And the fact that it's limited supply at 21 million Bitcoin makes it somehow special. But then there are all these other cryptocurrencies like Ethereum, Solana, Cardano, Dogecoin, Shiba Inu coin. They're invented by like a person or a team of people, unlike Satoshi Nakamoto, who is like the anonymous or pseudonymous inventor of Bitcoin and then has disappeared without a trace since inventing the cryptocurrency. So with these other cryptocurrency, you can attach a human face to them. So it's not, you can't exactly say it's that decentralized because you can point to a creator of the currency. So that, I guess that's why there's this perception that some crypto, like Bitcoin, are real, whereas others are kind of more like invented money.
But there are people behind Bitcoin. This is Paul's story. I couldn't get his byline in because I'm bad at screenshotting, but he some people that report on crypto all the time, I didn't know about these guys. Like a lot of people don't know about these guys, but there's actual humans behind Bitcoin that have control.
Yes. Anyone heard like the term decentralized or decentralization in the context of crypto? It's again kind of going back to the origin, to the genesis of crypto. It was like, what if we could decentralize finance and take out all the profit-seeking banks and finance, hedge fund, millionaires or whatever. I think that so this story came out a week ago, and it's about the kind of the underlying software that most of Bitcoin's network runs on. And it turns out that there's 5 people who have passwords to kind of go in and tweak the software, keep it updated, and fix bugs. And
this software runs a currency worth what? Is it 50 billion, Vicky?
500 billion.
500 billion. Oh,
Yeah.
Thank you. 500.
I mean,
billion.
yeah, it's so like it's a complicated kind of thing to explain, but the point is that even when you hear terms like decentralization, in the context of crypto, there's always software, and wherever there's software, there's people, because software isn't something that you can set it and forget it. It needs to be able to run on like the latest version of Windows or Mac OS, and for those updates to be done, there need to be developers who are involved. So, yeah.
So, thanks. I mean, I think we have time for just one more
Yeah.
question before lunch.
So when I was listening to this panel, all I had in the back of my mind
You lived in Latin America, right? Like,
Yeah, I was in El Salvador in July, and I was at a place that used to be called El Zonte, but is now called Bitcoin Beach. And I found that about half the businesses there accepted Bitcoin, and the hotel I was staying at had like recently stopped accepting Bitcoin because it had fallen so much. You know, it's and this is one of the kind of the issues with crypto. To the extent that it wants to replace money, it's got to be, you got to be able to transfer it between parties, you know, pretty quickly and easily, and it needs to hold its value. If I pay for a beer in Bitcoin, and then, you know, the price of Bitcoin falls by half before the company that sold me the beer can cash it out for dollars, then, you know, they lose. Yeah, I mean, you see a couple of jurisdictions. I think there's another. I think Central African Republic is also. There's a country. I think it's Central. I think it's Central African Republic that's also adopted Bitcoin as an official currency, and you know, I don't know that it's gone great for them or been particularly effective. I mean, in El Salvador, the reporting that we and others have done suggests that, you know, there's some kind of young tech excitable people who are on board with it, but a lot of the population is like, you know, I do not make enough money to be dabbling in this, and just give me dollars, because the dollar is their other official currency there.
And it's also important to keep in mind, like, a country doesn't adopt something like Bitcoin if, like, the currency is going great, right? So I don't know if you could link, like, the problems in El Salvador to Bitcoin. Like, they didn't embrace Bitcoin because, like, things were awesome.
Yeah. And there's also kind of some, you know, I think that we have some reporting on this. I mean, there's also some interesting conflicts of interest there between the crypto firms that are advising Bukele's government getting a stake in the infrastructure that the government is setting up to facilitate, you know, Bitcoin being an official currency there. I don't know that we have any stories on that yet, but.
One more question, because I think those two in the back have been nodding, and I feel like they had a question, and I want to talk to you.
Oh, okay. So I do have a question.
I knew it.
So I feel like with the collapse of FTX, it kind of illuminated to me sort of like a trend in the American economy where I would say every decade-ish, something drastic happens. People lose their life savings, people resignate into poverty and all these things. And so with the collapse of FTX being so recent, what does this say about the American economy that pretty much every generation something drastic is going to happen, and we have no guarantee of a stable kind of life, a stable economy of some sort for at least a lengthened period of time?
That's a great question. I love it. What does that say about the American economy? Now, I can't speak beyond crypto. Well, I could, but I'm not going to. Let me try.
Okay.
All right. So I think an important factor here is like the stress on the middle class, and the getting rid of things like pensions. Like, my family is all blue collar. They all have they had pensions, right? And now that people don't have pensions, it's hard. Like, you have to just like figure out how to like save enough money to retire. Like, that's really, really hard, I think. And you have to figure out how to get jobs in a different way, and like decide when you're 18, like how much like money you should borrow and pay back later. You guys will all be fine, don't worry. So I think that's like a stress on a lot of people, like normal people, and normal people are looking for places to help like get themselves out of the hole, to like get the same thing maybe their parents had or their parents' had. And crypto like looks like a solution to that. And so like that's like kind of what I think this fits into, like the wider economic situation with the U.S. But in like in the housing crisis, right? Like, more people wanted housing, they wanted to build wealth, And the problem was that they were given, mortgages that were just like untenable to like pay. I mean, there was other problems, I'm simplifying, but it's like the search to like, just like have a normal, decent life, and how it's hard.
Yeah, that was a better answer than I was going to say. I was going to say the economy is cyclical, and you get, every 10 years, probably more frequently on average, there have been recessions, and the cause of the next recession is never the same as the cause of the last recession. And so, those of you who go into journalism and cover business, it's a thing to be aware of. If you see somebody somewhere marketing a 20% return, that's something to be skeptical of if it's growing really fast. But yeah, absolutely. I mean, crypto tapped into the kind of wavering faith in institutions, traditional financial institutions, or, journalism or government or religion or whatever. Across the board in the United States, we've seen trust in institutions declining. And crypto sounds like a solution to that. And so it was able to get a lot of people's money. And then, this is a capitalist society where it's kind of every man for himself. To Jenna's point about pensions, some of you guys probably don't even know what pensions are. It used to be that if you worked at a company or at a, if you had an employer and you worked there for 30 years, they would pay your salary for the rest of your life. And now you have to like figure out your own 401k and like how much of your paycheck you need to put into it if you ever want to have a hope of retiring. And so,
And we're not trained for that, right? Like, I don't know about you, I didn't learn that in high school.
yeah.
I learned how to like bake a cake or something.
Most people just don't most people don't have the tools to like distinguish this thing that is promising you a 20% return from, if you invest your like Dogecoin in it, from, a mutual fund that is highly regulated and probably isn't going to get you a 20% return, but probably also won't take your money and disappear.
We won't keep going into your lunch, but thank you so much.